The Awesome Oscillator is a fine creation of legendary trader Bill Williams. It is a simple indicator that helps you trade in the direction of short-term momentum. I'll explain how the Awesome Oscillator is calculated and use it to program a simple trend-following strategy for the dollar franc. But before that, only a small fraction of people who watch my videos have actually subscribed. So don't forget to like and subscribe because it really helps to keep the channel going. With that said, let's get down to business.
The Awesome Oscillator is a momentum indicator that measures the difference between the 5-period SMA and the 34-period SMA. But unlike most indicators that use closing prices, the Awesome Oscillator uses the median price, which is the average of the bar's high and low. The 5 and 34-period lookbacks served Williams just fine, you probably shouldn't optimize them. The Awesome Oscillator is available in MT4 by default, under the Bill Williams folder. Green bars indicate the oscillator is rising, while red bars indicate it is falling. Since the 5-period moving average reacts faster than the 34-period moving average, oscillator values above 0 indicate bullish momentum, while values below 0 indicate bearish momentum. I'll illustrate 2 common ways to use the Awesome Oscillator. The first is the zero-line crossover. Of course, this is similar to a crossover of the 5 and 34-period moving averages. When the oscillator crosses above the zero line, it indicates a transition from bearish to bullish momentum, and long trades can be entered. Conversely, when the oscillator crosses below the zero line, short trades can be entered. Like other moving average crossover signals, a large number of false signals will be generated when the market is choppy, likely leading to a string of losses. Nonetheless, let's test a simple trend-following strategy consisting solely of these entry conditions. I'll program it in AlgoWizard now. Check out AlgoWizard.io if you want to program your strategy for free. Just search for Awesome. Select the crossing above condition, and set the level to 0. I'll select the market entry, and add in a 150 pip stop loss and trailing stop. For backtesting, we'll use the hourly dollar franc over the past 10 years. Those results are surprisingly good for such a basic strategy. Let's see whether the second method can produce better results. This strategy relies on a 3-bar pattern called the saucer, so-called because of the shape it forms on the oscillator chart. Long entry conditions are as follows. The oscillator is above 0, and remains above 0 while the following conditions are met. There are 2 consecutive red bars, with the second bar shorter than the first. The third bar is green. Apparently this pattern attempts to capture trend continuations after a brief consolidation. If these conditions are met, longs will be entered at the open of the 4th bar. Short conditions are symmetrical. Now let's translate those conditions to pseudocode. A little tedious, but whatever. Here are the backtest results. Despite being more specific, the saucer strategy yields far worse results. This isn't necessarily a criticism of the saucer, perhaps it will perform better with a different combination of strategy elements.
Wait, can't we also use the Awesome Oscillator to trade momentum divergence?
We sure can, and here's an example of bearish divergence. Prices make a higher high, but the oscillator makes a lower high, signaling a possible bearish reversal. I previously did a video on a MACD divergence strategy, which you can check out at the top right. The concepts are exactly the same. For simplicity, I will just stick to the zero-line crossover method here. Can we improve the basic strategy? Recall that the Awesome Oscillator uses the 5 and 34-period SMAs. The current crossover conditions therefore only take short-term momentum into consideration. Let's add a 100-period SMA to determine the direction of the long-term trend. If this SMA has been rising for at least 3 consecutive bars, an uptrend is present, and I will be allowed to go long. Here's an example of a short entry. A simple trend filter like this is a great way to swim with the tide and boost profitability. It's counterintuitive, but robust strategies are usually very simple. I'll add in this trend filter now. Redoing the backtest, results haven't improved dramatically, but consistency is much better. Stagnation has dropped from 1400 to 600 days. So pairing an Awesome Oscillator zero-line crossover with a long-term moving average is enough to make good money. If you found another awesome way to use this oscillator, let me know in the comments. To get the pro version of AlgoWizard at a discount, check out the link in the description. For an in-depth AlgoWizard guide, check out the video at the top right. For more trading strategies, check the video at the bottom.